Hey traders, Raghee here, and in this recap video I'm going to share with you a scan that I do throughout the day to understand sort of the relative performance between the different index futures, and then also to understand, in addition to that, what some of the ETFs and individual stock names might be doing. So I'm going to share with you a few layouts here and how I use them. So the first one you're looking at right now is I just call it the 12 layout. Where I've got 12 charts. The first column is the S&P futures, NASDAQ futures, and Dow. And then you'll notice there's 3 ETFs going from left to right from each one of those indexes. And they're in order of weighting. And then I use the popular ETF to represent the sectors. So I've got the sectors broken down in order of weighting. Now, if you've never done this before, let me share this with you. Now, a lot of people don't think of this when they're trading futures, and they don't think like sometimes stock traders enough. And I'll go the other way too with this whole idea of sometimes stock traders don't think like futures traders enough. Now, I'm at a site called ETFDB. It's one of my favorites. It's pretty much the only site that I use for ETF and research of the like. And if you notice, you can look up an individual ETF that lines up with a futures contract. In this case, this would be the NQ, right? So in the NASDAQ. So I click on holdings, and it lays out of the 104 holdings. I can see the top, well, all 104 of them. Take a look at the top 10 here. What I want you to focus in on is just how much, let's just keep everything at 2% and above. 100 holdings, but 1, 2, 3, 4, 5, 6, 7, 8 names have a 2% holding or more. Just 8. Everything else falls below this 2% line, a line in the sand, if you will. So that means really these names have a disproportionate weighting on what and where the NAS does and goes. So I like this advantage. I think it gives us a tremendous advantage as futures traders to understand that just a handful of stocks can move a market. Well, let's scroll down just a little bit more, and you'll see the sector breakdown. Here it is on the right. So here you have your sector breakdown. And again, if you've never done this, do this. It's actually a lot of fun. Or I need to get a hobby, but I think it's a lot of fun. So I have my sector breakdown, and notice the top. Anything at basically 10% or above, I'm going to cut it off at 9. 60% technology, 20% consumer tech, and about 10% healthcare. So that's where you see the way in which I have on the NASDAQ, the QQQ. I actually use the XLK, XLY, and XLV ETFs. Right? And what I'll do throughout this week is we'll talk a little bit more about these sectors and these ETF weightings, but let me show you one more thing. So now that I know what is going to be moving the NAS by way of the larger sectors, I can also look at the individual stocks within each one of these ETFs. But right on the open today, financials were dragging the market down. Well, financials don't have a major weighting in the NASDAQ. So when financials are in a bad mood, unless you want to short the Dow or S&P, steer clear of them because the financials are going to drag them down. If tech is having a pretty good rebound, hone in on the NASDAQ. And then, after that, hone in on S&P names. Right? You'll notice how much healthcare has an impact on these as well. And healthcare was dragging down the market as well. Now, here, 1 out of 2 were heading higher. Here, 1 out of 2 in the second weighted name heading higher. Here, I had 2 on the open. They started to gap. We had the gap down, then we had the move up here. 2 out of 3 were moving higher. So if you're going to see some strength in the early part of the day, you would have looked at the NAS and really nowhere else. As the day progressed, it pretty much became a free-for-all. But if you think about what are the names dragging the market down, financials, healthcare, they hardly turned around. That means if you want to short the market, if you're looking for a short, the S&P and the Dow, or those names would have been better. In the next video, we'll talk about this later on this week. I'm going to talk to you about how I use these kinds of layouts, what I call the microscopes. You take an ETF, and then you start to dive down into the individual stocks of that ETF. And this is the synergy that you can create when you're a futures trader. It makes you a better stock trader, and stock traders that understand futures, I think, also do much, much better than those who don't. It's like understanding the tide, and you're a boat captain. You got to understand the tides, especially when you're tying them up. You got to understand how a boat goes up and down with the tide, and you got to know what the tide is. In this case, the larger ETFs and these futures counterparts. And that's what I'll have you look at later on this week. See you in the next update.